It's always a dangerous crossroad when we approach inflection points. Price action is suggesting another test of our critical supports, the very supports that have been responsible for some notable bear traps and parabolic runs. Failing these supports, however, can introduce a stronger bear thesis. Welcome back to the channel on this happy Monday. This is ARCa. Let's dive into ticker symbol FNGR. Let's kill 'em. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol FNGR. And what we're observing here is, of course, the manipulation chart. And we now have another day of manipulation. In this case, we only had, well, it just doesn't matter. The fact is that we did have it. I know there have been other days that we've had major counts of manipulation strikes, right? Particularly this date here on October 24th. But yeah, we had just 2 strikes of manipulation today. But I mean, you can see the difference in price action when we're not getting manipulated versus when we are, right? So out of these total 17 days from 10:13 to 11:06 being today, we have 4 manipulation-free days, which now suggests that these 17 days are equal to 23.529% of manipulation-free days, which, I mean, that's just, it's just such a low number, right? So I'm very upset at these stats here because of what's happening here, right? So I'm trying to stay here for the community. I'm trying to kind of guide price action, or at least not even guide price action. I'm just trying to really be a good, what can you call it, man? A meteorologist or something, right? It's someone who can give you a good forecast, at least that. So I do believe that this thesis, or this thread of analysis today, is incredibly important. So let's go ahead and dive in on this, because we are approaching some critical zones. Now, this is that very same daily chart that we've been looking at. I cleaned up my charts. Some more so that we can be able to see what's happening here, right? So, and again, I apologize about my voice seam is still a little bit gone, but all good. Okay, so the critical support that we're talking about today, we mentioned 489, but for some, I don't know why I said 489, but when it was really 492. Right, price action came down to a low of 496 before getting an upside. Here's one thing that I want you guys to let me know in the chat right now. I'm not sure why this is happening, but I'm noticing, is it just me, or am I noticing that Webull is the only exchange, or the only broker, sorry, that's giving us a quote of $5.20 post-market? I'm getting a read of 505 or 506 across TradeStation, Fidelity, Robinhood, even Google. So if you're trading Schwab, if you're trading TD, any of the, well, they're one and the same now, right? But any of those other platforms, any of you trading DAS Trader, let me know what your quote is, right? Particularly in the, I know there's a lot of people trading on TOS, right, on Thinkorswim. So let me know what your quote is, right? Because yeah, I'm noticing a very interesting 3% run up, or 2.97% up from 505, closing at 520 after hours on Webull. So let me know if you're observing that anomaly as well. Okay, so if that's the case, then this jump in price action came up to around this resistance here, which still it's a very dangerous thing, right? So the fact that we came back down to the regression and popped up doesn't convince me too much. And the reason why is because we came short of touching that support. See how this is the 496 area right here, and then we still had some more room to drop to 493, 492. That doesn't convince me too much. So we have to be aware of what could happen in the event to where we do face some downside, because I do believe that we can come back down. But I don't know if it is valid, the 520 close, right? If there is a 520 close, then that means we have a different set of supports. That means that 505 now is a support, 505 to 496 particularly. But if we're closing at 505, that means that 493 is a support. Back down to some other areas of relevant support, particularly between 478 and 487. All right, so please let me know in the chat if you do know what that could be. Okay, so I want to remind you of something here too. Okay, please know that yes, this is a pennant, right? In fact, it was back-to-back pennants, right? That we're facing now. This particular pennant ended up closing, or ended up resolving at about 65 to 70% to the apex of the triangle. We are at about 70%, maybe, yeah, this would be 70% to the apex. If I think this would be around 75% here. So yeah, it's pretty similar. And just the only thing is that I'm noticing here that we only had, well, actually it was 1, 2, 3 tests. This one has had 1, 2, and I guess this would be the third if we touch it. So yeah, that would be confirmation here or a support. So it's just, the dangerous thing is that of course this formation can play to the downside too. Okay, so if it does break to the downside, we need to prepare. Okay, so that would indicate a move back down to the area of around 390. I don't believe that to happen, right? That is the major inflection point here, though. For this overall move here, this would be the inflection point to stop price action from dropping to this next inflection here at around 253. Okay, so we must prepare for this, but just know for a fact that this support, this regression, has led to some serious up runs, right? And we can't ignore that. So now just one more thing. Yes, the pennant is a bullish formation. It does favor the bulls, but it can be traded both ways. Please, please, please remember that fact. Okay, let's go ahead and move on to the next chart and see what we have. Okay, so now this is a different perspective, similar to that of the pennants here, but this is an ascending. Channel, or an ascending channel. So the ascending channel is also a bearish formation. Now, the only thing is that usually these bearish formations tend to realize when we're, sorry about that, team. Yeah, tend to realize when we're at about test number 3. There could be a confusion here, but I'm not sure. Okay, the thing is that this can very well be traded on a bi-daily time frame. Let's see. I mean, yeah, there's the danger. Okay, this is the danger here. Test 1, 2, and 3, and this would be its capitulation. And this would essentially suggest a downside here. Now, the problem is that this is disguised as a bear trap as well because of the pennant on a larger term time frame, that being at 75% to the apex, right over here, right? And that being a formation that is favoring the bulls. Okay, so that's something that we can mind here. Now, if we were to focus on an upside target here, so say for example, we were to recover, and the price action went to the upside here. So inversely, the first target to observe here, say for example, if we were to break out. Since we're so close to here, that's the only reason I'm saying that we can break out tomorrow. But in this case, we could break out at around 75% to the apex. Your minimum target would be around 7. Let me bring this down here. That would be about 774. But if we take the center of the triangle, sorry, the reason why I'm saying the center of the triangle right now, team, is for a very specific reason. If you measure this upside here from the break of this candle, which was the first close, right? Just like this, and then you start to match it around the initial pennant, you'll start to notice that this was actually the center of the triangle, right here. Okay, so that gave us the target that we faced right up here at 790, 798, or whatever that was that we faced. So it's only safe for us to assume that we would get a break from the center of the triangle too, from this iteration. Okay, so if we do that, You know what? I think I could safely say that it would be here. So if we were to do that, then we could get another price objective. Let's say that we were to break out from this same point here. Then that looks like we would be getting a target of, you know what? Let me bring it just a little bit down. There we go. That would be suggesting a target of about $9, $9.01. Now, if we look at price action here, the top side of this channel is around $9. So take a look to the right over here, right? I know the numbers could be a little small on the phone, but that's 893. Right up here on November 20th is 899. November 22nd would be around 903. So it is confluent to how the triangle is behaving. Okay, so that's also a potential. Okay, so I know that we have rhyming targets and all of that good stuff, but it is important for us to observe every potential play. Okay, hold on just a sec. Let me just go ahead and take so taking fib from this point here to this point here, the swing high to swing low, and we move on. We move the shills here. Let's go ahead and take a notice here. 2.618 at 901. And you're looking at the suggestion here of 901 as well. So it's lining up perfectly, geometrically, psychologically, and through formation analysis too. So it's looking like it would be the case. But please don't ignore that it does have a potential downside too. Okay, so another thing that can give us an initial drop suggestion is this, right? We're printing a bear flag here on the hourly time frame. You guys know that I trade, just a sec. You guys know that I trade the linear regression channel on the hourly time frame often, right? So, and our conditions are usually simple. A closure of an hourly candle beneath a mean band or beneath one of the channel mean, then that would suggest a downside here. And this is already, I usually don't like it when triangles trade all the way to the pennant. All the way to the apex, right? So this is a bear flag. It looks like a pennant, but pennants are identified when they are printed on an upside, not on a downside. Okay, this is a bear flag. So the bear flag in this case is suggesting a bottom side target. Let's take into account the trend line from the top side to the very bottom side of the back side. Okay, so that would, and this is the next hourly candle here, so that would be pre-market, right? So that is indicating a drop all the way down to $4.80, which is confluent to the bottom side of the linear regression channel. If you put this on a 30-minute, it's confluent to the very bottom of the linear regression channel. Let's say the bi-hourly. Bi-hourly time frame is consistent to the bottom side of the mean band where we are in the hourly. Okay, so it is very much confluent too. So this is suggesting a drop. But if we were to kind of measure the center of the triangle, that may give us a different target and another target of which we can take into deeper consideration. So let's just say that we were to break out from this point here, of course, right? That is suggesting a target of $4.92. That, my friends, is very, very confluent to everything that we've been talking about. By daily time frame over in 18 hours and 22 minutes, which is going to be tomorrow at market close. Look at the bottom side. Look at the right. See that support of the channel? 492. Let's go back over here and take a look at the triangle too. The triangle is drawn slightly differently, and it is on a daily here, so it is suggesting a bottom side of around 495. Okay, so yeah, I do think that 495 to 480 with a probably a concentrated area of around 492 could be the area that we can call a potential bear trap. Okay, but of course we have to be very, very careful with what's next. Now, this is the right-angled triangle, right? So this is an ascending triangle on a daily time frame. The support bottom of this on the next one is suggesting around 494. See how everything is rhyming? And now if we go to the volatility bands, this is the Bollinger Bands, we can see that the bottom side of the Bollinger Bands here, which would be 2 standard deviations away from the mean at 516, is 493. Lots and lots of rhyming there, team. Okay? So but I have to tell you that what could be indicating potential support is in fact as deep as the monthly time frame. This monthly time frame, as you can see here, the RSI signal is upside of the SMA 14. And even more specifically, the bi-monthly. This here, the SMA 14 is located in the gravitational zone of the bull weakness percentile. And you can see here how long we've been under this SMA 14 since November of 2021. That is the start of the bear cycle. Okay, so breaking outside of this SMA 14 does require a test of the support before a continuation onto the upside. What worries me is that this is a deep downside here. This is a bi-monthly iteration. It is not like a 30-minute. It is not like an hourly either. Like if we were to say this, a 4-hour time frame upside here to resist at this point could be around 538. Right? That could lead, or maybe even 516. The thing is that I don't know if it's valid, right? 520 is the resistance of my discretion here. That means that we would then have 516 as support. We can then reach the area of around 539. 531 to 540. So that resistance on the 4-hour could very well be this top side at 538. But I don't know, because the price is, I mean, there could be a serious arbitrage right now, right? So I mean, imagine that you did take your shares that are worth $5.05 from TradeStation or Fidelity, and you transferred over to Webull when it's trading at 520. Incredible arbitrage. You know, you'll be cataloging the difference of around 16 or 15 cents per share in an instant transfer. These are opportunities that a lot of institutional traders look for, pairs, right? But I would like to point out that, yes, we do have a little bit of resistance coming up in some of these immediate time frames. Let me see the 15-minute. Lots of consolidation. I can't tell if it's going to go to the downside or not through the RSI, but through price action, it does feel like it may want to touch the bottom side of around 492 to 480. I'm sorry, 495 to 480. I would really bank on a 492 before an upside. So don't forget to let me know in the comments down below what that is. There is a potential team. Please remember that I don't know which can happen first because of the difference in price. I don't know if it's going to be first to 538 or 5 because we're at 520 in some brokers or not. I don't know. It could be 538 first, then it could be 492, or it could be 492 depending on the broker, right? If we're at 505 and then up to 538, it's quite annoying to you know what I mean. But yeah, team, please let me know in the chat what you are thinking. Let's go ahead and start a convo on this and see if we can get ourselves some better knowledge. All right. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good rest of your night, and I will catch you at the bell mañana. Adios, team.